Welcome to our Binary Options 200 training series. We're going to start off this series with Binary Options 201 Fibonacci Retracements. If you haven't viewed our Binary Options 100 training series, I suggest you do so now, as it's well worth watching. Both series, Binary Options 100 and 200, are brought to you by binaryoptions.net.au. Fibonacci Retracement. So who was Fibonacci? Leonardo Fibonacci was a famous Italian mathematician, and he discovered a simple series of numbers that created ratios to describe the natural proportions of things in the universe. And these ratios can be used as a trading tool. So why do we use Fibonacci? Well, Fibonacci retracement is used by many professional and retail traders, and because of that fact, it is self-fulfilling. How is Fibonacci used? Fibonacci is used as a trading tool to identify the end of a retracement or a pullback in price, and can be used to join market rallies. When price moves in a general upwards direction, price uptrends. When price moves in a general downwards direction, price downtrends. And price creates this step in motion, which is a series of pushes and pullbacks, or rallies and retracements. So with a downtrend, we can have a rally to the downside, a retracement, a rally, a retracement, and so forth. With an uptrend, we can have a rally and a retracement, or using different terminology, a push and a pullback, a push and a pullback. So once we identify a trend, obviously the ideal place to join the trend is these troughs on an uptrend and the peaks of a downtrend. Here is your ideal area to place calls, and here are your ideal areas to place puts. As price moves strongly in the direction of our binary options position. So Fibonacci retracement provides a series of levels which act as potential areas of price reversal, or potential levels of where a retracement will become a rally, or a pullback becomes a push. If you could imagine, this black line is an uptrend. We've had a retracement followed by a rally to the upside. Now price is pulling back or retracing again. We would use the Fibonacci retracement tool to measure the start and end of this rally or push, and then the Fibonacci tool will automatically calculate these ratios for us. And each of these levels is a potential level where price would reverse, the pullback would end, and price would go for another push. There are 5 levels or ratios, but the middle 3, 0.382, 0.500, and 0.618, are the most commonly used levels, and these can also be expressed as percentages. This is an hourly chart of the dollar Swiss franc. Price is downtrending. We have a rally to the downside, a retracement, a rally, a retracement, and a rally. If we were to use Fibonacci retracement from here to the end of this rally, you'll see our fib levels. And as mentioned, the most common are these middle 3. As price retraces, we reach the 0.618 fib level. Price is rejected. We have a bearish engulfing, and then we have strong downwards momentum as price goes for another push on the downside. So once this has been identified, we then have a number of opportunities to look for signals to place puts, as we know the momentum is going to be on the downside. This is a 4-hour chart of the pound against the dollar. We have a clear uptrend, a push, a pullback, a push, a pullback, and another push. Let's use our Fibonacci retracement to mark the start and end of this push. We will look at our three main levels. You'll notice our first level, 0.382, is reached. Price is rejected. We have an engulfing candle, a bullish engulfing, and then price reverses and goes for another push. One of the keys to Fibonacci retracement is to identify signals on a Fibonacci level, such as pib bars, rejection of Fibonacci levels, and engulfing candles, instead of purely using a fib level by itself to place calls or puts. As always, check out our website and continue to watch these videos.